Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to rip through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go, generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive in there. Let's see what people are sharing, and I'll give you my financial opinion. If you want to follow me at finding_finance, and if you want to join our community, finding-value.com, we do have a discount going on, LEAP, if you want 50% off the first month to try it out. It goes to regular pricing after, or you can join a yearly membership with a much bigger discount. All right, guys, so let's look and see what's going on. We've got Ben Smith, pretty common name there. Utility facts for data centers. AI load growth is quite insane. The chart below is just 5 utilities expectations. I pulled the data and summarized it from the PJM report. So data center load growth from select utilities. Dominion's one of the utilities that I know is publicly traded. I'm not sure about these other utilities. But huge growth is expected. 2024, here we are today, monster demand. This growth would constitute over a 5x between now and 2030, because this is below 5,000 megawatts and it's going above 25,000 megawatts. So that's a gigantic amount of energy. Right now, this growth is probably, and I don't know for sure, but it's probably going to be a large addition to the network, greater than probably a lot of these large cities. So the growth here is equivalent of adding many large cities like New York City, Chicago, Los Angeles. Like, just start stacking them up. That's what we're adding into this. Crazy stuff. Here's chart of the week, bullish commodities. This person writes, extremely bullish technical chart. Rare that you see this type of setup. So we basically have come back to support. The way that I do this, and this is they're looking at the strength down here. This is how I see it. We've got a big 3-hump consolidation, a breakout of that consolidation. This is the first wave. This is your wave 2 pullback. We're about to start wave 3, which is going to be a gigantic move to the upside, in my opinion. On the bottom here is the 200-day moving average breadth, and you can see the breadth is really starting to expand here and break out of this pattern here. So we've got a breakout of the breadth of commodities, and the index looks like it's ready to go. So hopefully that's the case. That's what I'm invested for the most part, and hopefully we get a big run out of this thing. China's January-February industrial production growth absolutely smashed expectations today, up greater than 7% year over year versus expectations of 5% year over year. And this has been their reopening, basically, from COVID. You can see we're not too much on the left, and here we are growing rapidly the past few months. Copper, gold, and palladium, oh my, metals are working. And this is all-star charts for palladium futures. You can see the inverted head and shoulders with the neckline here, breaking to the upside, and we could potentially be breaking soon the downtrend line at about $1,100 or so. So we start clearing $1,100. That's a good thing. We have a lot of resistance up around $1,275. So there's a lot of trading that occurred up here. So $1,250, $1,275, that's where we're going to hit a little bit more overhead resistance. But palladium, it looks fantastic. Copper looks fantastic too, that he mentioned, and also gold has broken out. So it's palladium's turn too. Peter says David Rosenberg is right that the economy is much weaker than the consensus view, but he's wrong to think that the inflation problem has already been solved. He is missing the bigger picture. We're not just headed for a standard recession, but catastrophic stagflation is what Peter thinks. Bar charts here. So I wanted to make a comment on this. So Bitcoin, BTC will hit $150,000 this year and could hit 250,000 in 2025, says Standard Chartered. So Bitcoin to rally to 150, and then it could touch 250 in 2025. This is why people buy Bitcoin. They don't buy it because they have to use it for something. They don't buy it because it provides outstanding utility. They buy it because they think it will go up. Now, what happens when Bitcoin doesn't go up? A lot of when I've heard a couple of interviews, I've heard Raoul Pal, I've heard some other mathematician guy talk about Bitcoin as well. And where I get confused is every single one that converts, like Raoul turned this way, this math professor, whoever he was, he turned that way. It's like they'll say something on the lines of this. Only 1% of the population has adopted Bitcoin. And then the one guy who was doing the interview, I can't remember his name. He's like a skinny guy with a big forehead or whatever. He he said, "Oh well, I can believe in the digital world going forward." So here's my question: why is Bitcoin the answer for the digital world going forward? That was just assumed when they said that. Another assumption they make that people are just going to continually adopt Bitcoin and that we're at 1% and we're just going to get to some 80% adoption or something like that. That's kind of what their inherent, I don't know, like their baseline thinking is that all these people are just going to adopt it. My question is why? Why would we adopt it? Why would I adopt it? Do I have to be in it? I mean, the only thing for a use case that I can think of is that you can put money in it, walk across the border, and then take it out. That's the only thing that I can think of. Outside of that, it kind of sucks at everything. It's not super easy. It costs money. There's a lot of things that it kind of sucks at. Now, I don't really transfer money cross borders hardly ever. If I don't even think I've ever done that. So I don't really have a need to be transferring money across borders, but maybe there's some need there that I just don't use. But the way that they talk, it's like they are completely mesmerized by the potential adoption rate and how this thing could become so expensive. It's like they're in the middle of the FOMO. And Peter Schiff made a comment. It's like, well, I'm not in. He doesn't own any Bitcoin, and he's not in the middle of Bitcoin. And he's like, maybe if he got sucked into the middle of it, maybe that's what he would think. And I don't know, guys. I mean, is it possible that Bitcoin goes way up like this? It is possible. I just don't know how to value it, and I don't think there's much utility to it, so I don't want to touch it. I don't know, my case on it. Important, commodities are breaking out of range, introducing the potential loop here. So this is the commodity doom loop that he poses. He says, you were here where markets buy commodities to hedge against price increases. And what he thinks is that we are now here, commodities increase in price, reflecting the hedging demand. And then he goes up, inflation expectations rise, markets buy commodities to hedge against price increases, and then commodities increase in price, reflecting the hedging demand. It just keeps going up and up and up. That probably is the case. But I do think that there's deficits. And outside of this doom loop, I think that there's going to be shortages of certain materials. And that's not in this doom loop. But the financial money flows could exacerbate that. I will say that. Art says oil demand in January, February gained 6% to 14.4 million barrels per day. Nationwide, crude production was 35.11 million tons, 2.9% higher than a year ago. So China starts a year with record oil processing on holiday demand. Crude refined in January, February was at 118.8 million tons. Gasoline and jet fuel demand climbed over the Lunar New Year. So lots of demand climbing. To be fair, Saudi cut is real. Everyone else, not so much. Again, OPEC continues outside of Saudi to really crank whatever they can. Saudi's the only one that's really doing any sort of cutting. So what one could say here is that Saudi is literally controlling the world's oil price. Because if they're flat out here for the most part, or they're pretty close to flat out, then Saudi's the only one that's got spare capacity. And that gets kind of scary because if demand continues to increase and we eat through Saudi's capacity, well, then we're at the world's pumping capacity where demand could outstrip the entire, uh, we'll call it the entire world spare capacity. And I don't think we've ever had a situation like that ever. I don't think we've ever had that before. And it's not like we're sitting on high inventory levels around the world. We're basically draining our inventory levels. This is such a good setup. And these companies are so primed to make so much money from this situation. Up in Canada and some of these other places, these high cost producers, they're going to rip. They're going to rip. All right, JC, this is a great chart. It says Fed pivot or not, liquidity is on the rise again. Overall liquidity as defined by the Fed's balance sheet, less reverse repo, less the Treasury's cash balance at the Fed's TGA, has been rising since mid-2023, taking stocks with it. So overall liquidity, you can see, has been going up the past half year or so. First-time housing affordability is the worst on record per Bloomberg. So first-time buyers face the least affordable market on record. If you've got the largest shortage in the housing market, this is what it would show. You would have the least amount of affordability. The affordability index would be at its lowest, its worst, because you have a housing shortage. Global Atomic getting crushed, 27% down on Niger news. That's called country risk. And I know Goviax was down quite a bit too. Now, is this a buying opportunity? I don't know. I think we're probably too early to know that. And the price could sink even further. So what I do is I wait. I wait whenever there's a really large sell-off, I wait for a while. Wait for the momentum to dissipate, then I'll assess what I want to do. And no, I didn't sell my shares, if you want to know. Zom on CNBC says gasoline demand is at an all-time high. Crude oil demand is also at an all-time high. EV penetration is not eating into demand, is what they're seeing out in the real world. So Kathy Wood's definitely wrong about this EV and oil going down to $20 a barrel and never going above it. Good luck with that one, with that call, Kathy. The free cash flow per share of the struggling Google, and look at the free cash flow per share. This is the measurement. The ultimate measurement is free cash flow per share growth. This is an insanely good company when measured by this measurement, and that's going to directly go to your bottom line. It looks like the 10-year annualized return rate is about 20.5%. 5 years about 28%, and so forth. 1 year is about 20%. So this is really what you want to look for when you're investing in companies: is free cash flow per share. Art Berman, the cloud now has a greater carbon footprint than an airline industry. A single data center can consume the equivalent electricity of 50,000 homes. And that's what we were looking at about that AI, artificial intelligence data center demand. We've got crazy electricity demand coming ahead of us. And all the transmission needs to be upgraded. This is such a great investment opportunity for power generation and transmission of power. Such a great spot. Morgan Stanley revises higher Brent price forecast. How Brent can reach $90 a barrel this summer. No way, I would have never guessed. Barron's Gold Mining Index to gold ratio is at its lowest point since 1940. Something has to give. Either gold prices pull back sharply or gold miners start ripping higher. I'm with the latter there. So 1940, we are below in this ratio, going all the way back to 1940. We're the cheapest we've ever been. Do you think this is a good time to buy the Barron's Gold Mining Index? I would say definitely yes. Definitely, yes. And I know other people say, well, it hasn't moved since 1970. I'm like, guys, this is going to bottom out and it's going to rip at some point. You're going to have to be patient. That's really what it is. US Pacific shipping volumes up 40% year over year. Singapore and Chinese ports buoyant. Something's going on. What recession are we seeing? But Asian Pacific shipping volumes are up. So we saw up here that Asia was growing quite dramatically. I'm not going to go all the way up there, 7%, and their shipping volumes are definitely showing that. Freight futures, which are also showing, Capesize and Panamax are both up 5%, 2%, and tankers are down 1%. That's what we're seeing for shipping, and this is what's driving some of that. Eric Nuttall says, we remain bullish here. So this is total global held inventories way down there, just continues to draw down. Global observable oil inventory onshore oil on water. The surplus deficit, so this is your deficit that you're running, is the forecast that's coming up. That the deficits are actually going to increase and the drawdowns are about to accelerate here. So this is we'll just dive into it here real quick. This here are estimates of what's coming this summer, basically, and this is the estimates that the deficits will be running. And that's going to increase oil price when looking forward. And then silver price keeps climbing in China and just reached $28 an ounce today. Good luck to the riggers. U.S. domestic Bitcoin miners consume more electricity than 25 states in 2022. U.S. Bitcoin consumption is 60 terawatt hours. U.S. gold mining consumption is 13 terawatt hours. The U.S. estimated production in 2022, Bitcoin's 125,000, gold is 5.5 million ounces. This is the U.S. 50 states electricity consumption for 2022 versus the estimated domestic Bitcoin and gold mining consumption. Here's gold and here's Bitcoin. And I live in Colorado, so Bitcoin uses more power than our entire state of Colorado does. Good work, Bitcoin. Peter says, oil is set up for a nice top line draw this week. Utilization picking up, cracks are surging, Russian refineries burning, and Cushing drawdown about to accelerate into spring. Taken together, very favorable setup as we exit maintenance. You will see material inventory depletion through Q3, and that's what Eric Nuttall showed above. But that's what we've got for today, guys. That's all I see. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you like. And we'll catch you later. This is Finding Value.